Hello everyone and welcome back to Explain the Charts. Today, September 16th, 2025, we're doing a comprehensive breakdown of the QQQ, the Invesco Nasdaq-100 ETF. By first looking at the major news influencing the market and then diving deep into the candlestick data. The Nasdaq composite has recently been on a tear, notching fresh record highs, and as of yesterday, September 15th, 2025, it posted another strong close, marking back-to-back weekly gains. Much of this positive sentiment stems from President Trump's optimistic remarks regarding trade negotiations with China, indicating that talks are progressing favorably, which typically bodes well for global markets and tech-heavy indices like the Nasdaq. Adding to the bullish narrative, the Federal Reserve's policy meeting this week is widely expected to result in a quarter-point rate cut, the first in 9 months, with markets anticipating further cuts by year-end 2026. However, not all news is bright. Analysts are cautioning about the stock market's relentless rally potentially turning into a melt-up, a rapid, unsustainable surge often followed by a significant correction. We also can't ignore ongoing concerns in the tech sector, specifically the challenges faced by Nvidia, which saw its shares drop earlier in the year following antitrust law violations and continued investigation in China. A reminder of the geopolitical risks at play. Although that Nvidia news is from February 2025, its ripple effects on semiconductor sentiment and the broader tech landscape are still relevant. Furthermore, the New York Fed's Empire State Manufacturing Index recently fell sharply into contraction territory, indicating some underlying economic weakness. Interestingly, Nasdaq itself is actively innovating, modernizing financial market oversight with new surveillance technology and partnering with AWS for new solutions designed to enhance liquidity and drive growth. President Trump also proposed shifting from quarterly to biannual earnings reports, aiming to encourage long-term strategic focus, though this could face opposition from investors who value frequent updates. Now, let's turn our attention to the charts to see how these macroeconomic factors and news events are translating into price action for QQQ. Looking at the one-day chart for QQQ, we can observe a dominant long-term uptrend despite periods of volatility. Since May 2024, the ETF has consistently made higher highs and higher lows, reflecting strong investor confidence in the technology sector. Notice the sharp pullback we experienced in early April 2025. This period saw QQQ drop from around 476 down to lows near 402, a significant reversal that tested investor resolve. This dip coincided with heightened concerns over economic data and global trade tensions at the time, underscoring how swiftly market sentiment can shift. However, the market showed resilience, quickly recovering from these lows and establishing new support. A key resistance level was initially seen around the 490 to 500 mark in mid-2024, which, after multiple tests, was decisively broken through, turning into a new support zone. More recently, the 520 to 530 range acted as a strong support level during several minor pullbacks in late 2024 and early 2025. The rally in August and September 2025 pushed QQQ into new territory, with recent highs now challenging the 590 level. The daily candles show robust buying pressure on up days, often accompanied by higher volume, indicating strong institutional interest. Now, zooming out to the entire data range again on the daily chart, we can clearly see the established trajectory. The 50-day and 200-day moving averages, if plotted, would likely show a healthy bullish alignment, with the shorter-term average above the longer-term one. Volume spikes on down days, particularly during the April 2025 sell-off, suggest moments of panic selling, but the subsequent recovery on strong volume indicated buyers stepping in. The overall trend is undeniably bullish, driven by the strong performance of Nasdaq's top companies and the broader enthusiasm for tech innovation. Let's transition to the one-hour chart to examine more recent price action and intraday dynamics. Here, on the one-hour chart, covering roughly the past month, we see a continued upward bias, but with more defined consolidation phases. After a solid run-up in late August, QQQ entered a period of relatively tight trading between approximately 560 and 575 in early September. This consolidation, characterized by smaller candle bodies and fluctuating volume, suggests a battle between buyers and sellers as the market digests previous gains. The price often found temporary support around the 565 to 570 region during this time, indicating a short-term demand zone. Conversely, overhead resistance appeared to be near 575, where upward movements were frequently met with selling pressure. The most recent candles show a breakout from this consolidation, pushing towards the all-time highs reported in the news. This breakout is typically a bullish signal, especially if accompanied by increasing volume, suggesting renewed momentum. Focusing now on the 15-minute chart, we can gain an even finer perspective on the recent rally, particularly yesterday's strong close. Looking at the trading activity from yesterday afternoon, September 15th, QQQ started consolidating around the 587 to 588 level after a morning surge. However, in the late trading hours, we witnessed a decisive push upwards, with candles showing strong buying momentum, culminating in the reported record close of 591.68. This late-day rally, often referred to as a power hour surge, indicates strong institutional buying or positive news flow driving prices higher into the close. The increasing transaction count and volume during this period corroborate the strength of the move. For short-term traders, observing these intraday breakouts on higher volume after consolidation periods can present key entry opportunities. Conversely, reversals from key intraday resistance levels could signal shorting opportunities, or at least a time to take profits. The level of 588.00 acted as a minor resistance, which was quickly overcome during this particular afternoon. This short-term strength aligns perfectly with the news of the Nasdaq Composite reaching new record highs on favorable trade talks. So, what does all this mean for QQQ going forward? Let's recap and look at the outlook. In the short term, QQQ remains heavily influenced by the Federal Reserve's stance on interest rates and continued developments in U.S.-China trade relations. If the Fed proceeds with its anticipated rate cuts and trade talks continue positively, QQQ could very likely maintain its upward momentum, possibly targeting the 600 level, with about a 70% likelihood in the near term. Conversely, any unexpected hawkish comments from the Fed or a deterioration in trade talks could trigger a sharp pullback, potentially retesting the 580 support level, which we assign a 30% probability. The melt-up warning is a crucial consideration. If the rally becomes too parabolic without fundamental backing, a significant correction, possibly back to the 540 to 550 range, could occur within the next few months, with a 45% likelihood if market sentiment rapidly shifts. However, the Nasdaq's consistent innovation and strong earnings from its component companies provide a solid foundation for long-term growth. For the long term, extending into 2026, QQQ's bullish trajectory is likely to continue, especially if technological advancements, such as in AI, remain robust and economic conditions stabilize globally. A break above the 600 mark could open the door towards 620 to 630, with a 60% probability by year-end 2025, contingent on sustained positive news flow. Key price levels to watch include immediate support at 588, then 580, and stronger support at the 560 to 565 range. On the upside, immediate resistance is not clearly defined since we are at all-time highs, but traders should watch for psychological levels like 595 and 600. Keep an eye on economic reports, especially inflation data and employment figures, which heavily influence Fed policy decisions. Also, monitor geopolitical developments and any new announcements regarding tariffs, as these can quickly alter market sentiment. Remember to always incorporate risk management into your trading decisions and understand the broader economic context. That's all for today's in-depth analysis of QQQ. Make sure to subscribe to Explain the Charts for more market insights.